Good morning. This is Mark Soderberg with ADM Investor Services with your early morning ag outlook for Tuesday, October the 10th. Prices overnight were lower across the board as the bears remain in control. Corn is down about 2 to 3 cents, 4 to 5 lower in the soybeans. Both products are lower as well. Wheat prices down about 8 to 10 cents. Speculative traders just continue to chip away at their remaining long positions in the soy complex. Yesterday, large spec traders sold another 5,000 contracts of soybean oil. That marks the fifth consecutive session now that they have been net sellers. Not even sharply higher energy prices yesterday were enough to keep vegetable oil prices propped up. There were also modest sellers in corn and soybeans, while being light buyers in the meal and Chicago wheat. We've got large speculative traders now pretty much flat in the soybean market. According to the CFTC data, money managers have not been net short in soybeans since April of 2020. Yesterday being a federal holiday in observation of Columbus Day, there were no export announcements nor crop progress and conditions after the close. They will be released during today's trade. We look for harvest progress at roughly 35-36% in corn as of Sunday, with soybeans at slightly higher at 44 to 45%, both slightly above the historical averages. We should see another 1 to 2 days of good harvest progress here before rains do begin to overspread the Midwest from west to east. Models seem to have shifted the system a bit north in recent runs, but we still expect 1 to 3 inches of rain across a pretty wide section of the nation's midsection, slowing harvest likely into early part of next week. Global weather seems like it's trying to show some improvement, with better prospects for meaningful rain in Argentina and west central Brazil in the second half of October. Too much rain continues in southern parts of Brazil, which will likely lead to lower wheat production and quality. Saffers and Mercado estimate Brazil's first corn crop plantings have reached 51%, just ahead of the 5-year average, while Ag Ruel places bean plantings at 10%, in line with expectations and a year ago. Malaysian palm oil stocks did rise almost 10% in the month of September, but they were slightly below expectations at 2.3 million metric tons. Production did rise 4% over the previous month, which was in line with expectations. USA report on Thursday, looking for slightly lower corn and soybean production, slightly higher soybean and wheat stocks, slightly lower in the corn. Crude oil prices have moderated here a little bit in the overnight trade, currently down about 50 cents a barrel. That despite ongoing tensions and violence in the Middle East and the Black Sea regions. New 5-month low overnight in November beans before we rebounded a touch here this morning. A new 4-month low in December bean oil, and D's corn did violate its 50-day moving average. Fears of global economic slowdown or recession, along with improved weather forecasts in South America, continue to weigh on commodity valuations. We'll have to see if we get something from the USDA later this week to provide a spark, or if we see some evidence that prices have gotten cheap enough to stimulate some better demand. Thank you for listening, everyone. I hope you have a wonderful day.